Okay, folks, welcome to the Contrarian Trader. This is Bob Desmond. Tonight we're going to go over two symbols. The first is EGHT, the second is Microsoft MSFT. Now, on July the 1st, I did a video, a very brief video, with regard to EGHT. The company name is 8x8. Because one of my competitors, I received their trades quite often, and I received a recommendation, and I don't name names here. This is really just to point out the differences in style and methodology that I have between my competitors. And I made mention that 8x8, let's take a look at the chart, which was recommended by my competitor on July the 1st, would probably head higher. I conceded this point. However, I doubted that it would close above its 50-day moving average, which was in a steep decline, and that the stock should be avoided for that very reason. Now, this evening, in the market-wrapped commentary that I sent out to my members, I added EGHT onto our buy watch list, and that is at $1 less than where it was recommended this time last week. So by us showing patience and waiting for the stock to pull back and come to us, now we have the edge over other traders, especially those that listened to a so-called stock guru who wasn't watching the charts and didn't see the resistance that really was right out in front of us. So what is it that we like about the stock now, besides the fact that it's pulled back? Well, the market sends you signals. We can all complain about the stock market being rigged, algorithms doing this, the hedge funds doing that. The market still sends us signals, and the edge that we have over hedge funds is that we're far more nimble. We can make decisions without committee. And what the market is telling us is that by virtue of these bottoming tails, there are buyers below. Now, could we see a continuation pullback, perhaps down to this prior support level, which acted as a pivot point or a breakout point? Absolutely. And I hope we get there. But the point I'm trying to make here is that we never buy into resistance. We always buy on a pullback, and we wait for the markets to send us signals. That's when we get involved with a stock. Now, this evening, I received another email from this trader, and it was with regard to Microsoft. Now, unlike EGHT, I'm not so vehemently opposed to the trade. I just don't like the blanket statement of I'm bullish, it's going higher, leading you to believe that you should go in tomorrow morning and buy the stock. I think that's crazy, because each stock is what I call a show me stock. It needs to show that it's got the strength to break out above resistance. Now, what he properly did is that he opened up his video using a monthly chart, as I have here. And what he discussed was a very, very long consolidation. Absolutely correct. A very, very strong consolidation. And he did point out the inverted head and shoulders setup, of which he is correct. Here's your left shoulder. Here's your head. Here's your right shoulder. Here's your neckline, a breakout above 31.83. It was off to the races. This was a buy all day long. So there's no argument there. My issue is that he didn't go back to 2000, March of 2000, and identify this topping tail. This is where we put in a lower high. This wick, where I have the arrow, is a sign of sellers above. There is resistance above. And where are we at right now? The peak was at 42.20. We're trading at 42.29. We are right at that resistance level. Now let's drill down, and this is what he didn't do that I do. It's called multi-period charting. We want to drill down from the monthly chart to now a weekly view. And as you could see, a powerful move higher. Here was your breakout point, 30.86. We pulled back, formed a higher low. Prior low was 21.70. New low is 25.12. We rallied off the lower band of the rising uptrend channel, and in January of 14, we really took off for a parabolic move higher, peaked out at 41.37, pulled back. The stock was so strong, it didn't even pull back to the lower band. It found support at, say, 38.75 and rallied higher. Now this is where the caution flag comes on the track. Again, still on a weekly chart. We did not have the power to reach the upper band of the rising uptrend channel. Not only that, we are making new weekly lows. Never ever good. Warning flag is on the track. So I draw my trend line up to illustrate the current uptrend. If we get a close below the lower band of this rising uptrend channel, we're coming down to this lower band here. This is your secondary uptrend line. Here is your primary uptrend line. This line here is the Rubicon. This stock closes below this lower band, it's all over for several weeks to several months. You need to avoid it. So on a weekly basis, we are at resistance at 42.29. And where do we close today? 41.67. Let's go back to the monthly chart. Where was our peak? 42.20. So we did not hold this breakout above the prior high. It failed. Now, could it be in a consolidation? Absolutely. No doubt about it. But as of right now, the weekly chart is telling me resistance at $42 per share. The huge resistance that this showed back in 2000 deserves a little bit of respect, because from this point in time, we went into a decade, more than a decade, of consolidation. Back to the weekly chart. What's bullish about this chart? What I'm noting is that the down volume is dropping off of a cliff, which is a bullish sign. However, so is up volume. MACD appears to be putting in lower highs, 4 sequential lower highs. And we may go negative on a weekly basis. And if this goes negative this week, the probability of us closing below this support level is very, very good. Daily chart. This is how we want to do this. We want to take our monthly chart, 60,000 foot view, drill down to a weekly chart, 30,000 foot view, daily chart, 10,000 foot view of the marketplace. Microsoft on a daily chart. We are making lower highs. Are we in a consolidation? Absolutely. What do I find bullish about this chart? What I find bullish is that we are holding the support level. We have done so for several days now. Down volume on Wednesday declined. Very, very bullish. Now, what do I see that's a negative? Well, there's something called oscillator leading price performance. What does that mean? The RSI, which was in a pennant formation, broke down. Note the lower highs. It broke down below this lower band of its rising uptrend channel, which had been intact since May. It's broken down. You have your ultimate oscillator making lower highs, and it appears to want to go lower. Stochastics rolling over. Williams percentage R trading below the neutral line at 50. With a healthy stock, you want to see a stock trade around or bounce off of that 50 level and then proceed higher. In this case here, we're now not only making lower highs, we are now making lower lows. Here's your prior low. We just broke down below that level. Now let's take a look at the 30-minute chart. This is your 5,000 foot view. You have RSI in a tight consolidation, price action in a tight consolidation. However, it is making lower highs, but it is holding support. Ultimate oscillator is struggling a bit. Note how it's rolling over. It should be bouncing off this lower band, heading up to the upper band, but it's not. It's flattening out and threatening to break down. Stochastic RSI, very, very bullish. It's broken out above this downtrend line. Slow stochastic appears to be looping up and above the 20 level. That is fairly bullish. Nice little double bottom setup on your Williams percentage R. However, that remains in a downtrend and is flattening out and now moving lower. So the jury's out. Many times when you're seeing a stock in a tight consolidation, the oscillators, you know what, they send you false positives and false negatives. So price performance is the most important. And on 30-minute chart, what concerns me the most is that you have price below its 50 and 200 period moving averages. That concerns me. So now the question should be, okay, you've laid out the bear case fairly strongly. You've also laid out some bullish signs for the stock. When would you trade it? It's a great question. Again, as I said earlier in the video, every stock is a show me stock. It has to show its strength. So if it's been in a tight consolidation like this, one must believe that it is setting up for a move higher. And when you take a look at the weekly, the monthly chart, hey folks, listen, I'm a contrarian, but I'm not a fool. The trend is your friend. And the trend is still up. Odds favor bulls. So that being the case, I'm not going to walk away and say I'm bullish, buy the stock. No, that's not the way it works. Not the contrarian trader. What we want to do is we want to see this stock break out and close above this declining downtrend line. And ideally, what we want to do is employ the 3-day rule. We want to see a trade above this support level for 3 consecutive days. Then I might be a buyer of the stock. But as of this point in time, until the stock shows us that it has the buying power, that there are enough buyers out there vis-a-vis volume to push this stock higher, my mind is stuck back here in 2000, where I know for a fact you have a lot of institutions still holding on to this stock, and all they want to do is one thing. They want to get made whole. They want their money back. It's psychological. To ignore it is ridiculous. The charts are your friends. So the fact that we have the knowledge that we have all this overhead resistance from back here, and you might be saying to yourself, come on, who's still holding? There are plenty of people still holding. And all they want to do is get their money back. The high was 44.01 back in December of 1999. They don't care if it goes to 44.02. If it gets to 44.01 and their screen turns green, with this trade, they're out. So we need to respect that. It's psychology. And that's it, folks. If you have any questions, send me a message on StockTwits, or if you watch this on my website, enter your email address. You get notified of these videos as I make them. I hate spam too. I guarantee you will not be spammed. And if you have any questions, leave a comment on either my website and again on StockTwits, or if you watch this on YouTube, on the comment section below. And that's it, folks. Profitable trading to you. Be well. And I'll talk to you soon.